Happy New Year. Thank you for joining us for the Sharon Partners quarterly market update for the December quarter 2024. I'm Kim Hope, and as always, I'm joined by Dr. Steve Garth. Steve, thanks for joining us.
Yeah, thank you, Kim. Great to be here.
Well, Steve, it has been a really interesting 12 months, hasn't it? I know we've had some great outcomes. Markets around the world have hit record highs, although we've had a little bit of a slowdown in recent weeks. Few interesting things happening. Interest rate rises. We had an election over in the US. Why don't we start with Australia?
Okay, Kim. Well, it has been quite a dramatic year. And when you look at the Australian market, this is sort of a day-by-day chart. Lots of ups and downs, there always is. But overall, Kim, the Australian market's returned 11.6% return for the year. That's a great return. Now, you can certainly see, to your point, it's come off in the last few weeks. A bit of a holiday slowdown going on as we came to the end of the year. That's probably got to do with the RBA meeting in December that said, look, inflation is still a bit high, not expecting to lower interest rates soon. And of course, the market sort of didn't like that and thinking, the Australian economy is pretty slow. So the market just coming off there.
And Steve, we know the Australian market is the story of the banking sector and the mining sector. Can you give us a bit of commentary about each of those?
Yeah, they are the two biggest sectors, Kim. They're more than 50% of the Australian market when you combine them. And it really is a tale of two different sectors here. Look at this chart. Banks having a lovely time. They're up over 33% for the year. But the material sector, they're our big miners, that's going really poorly. They're down 14% over the course of the year and 12% just in the quarter. So they're having a tough time, the miners.
Why is that, Steve? Why is it that sector is really suffering?
It's all got to do with iron ore, Kim. So when I overlay the price of iron ore here over the year, you can see how closely aligned the iron ore price is to the price of the materials sector. Now, why is iron ore down by more than 20% over the year? It's because our largest buyer of Australia's iron ore are the Chinese, and their economy is going not so well, so they're not buying it.
Well, let's move overseas, Steve. What can you tell us about what's going on in the US? We know that the big tech stocks obviously form a big portion of that story. Can you give us a little bit more in-depth insight?
Yes, for another year running, those big tech stocks have led the US market to another sensational return in US dollar terms, Kim. It's up 25%. In fact, there was a time in December where market analysts were saying this could be the best annual return ever for the S&P 500. Now, that didn't quite happen. Once again, you can see this holiday slowdown just in the last week or so of December. That one's also got to do with the central bank. In this case, the Federal Reserve, in their December the 18th meeting, gave a 25 basis point cut. Now, you would think the market would go, woohoo, another rate cut. This is fantastic. But the Fed chairman said, don't expect as many rate cuts as you're hoping for in 2025, and the market didn't like that. So it seems that markets around the world, Australia and the US and other markets as well, are all just sort of getting a little bit cautious as we start 2025.
Okay, and beyond the US, what about the rest of the world, Steve?
So let me show you how the rest of the world has gone in US dollar terms. So just superimpose it on this chart. And this looks absolutely horrible, Kim. You can see that in the last quarter, the rest of the world is down minus 7.4% and only up a measly 4.7% for the whole year. But that's in US dollar terms. That's what a US investor would look at. And it's all got to do with the strong US dollar in the last quarter.
So with a high, strong US dollar, Steve, is that bad news for Australian investors?
It's not necessarily bad news for Australian investors, but it's not great for the Aussie dollar. So the Aussie dollar is down about 10% just in the quarter. You can see in the chart here, it started at 68 cents at the start of the year, wobbled around, got back to 68 cents at the start of the quarter, and in the last quarter, it's fallen out of bed to 62 cents. Now, that's because we've got a weak domestic economy. Our largest trading partner, China, is in the doldrums as well. And as you mentioned, the broadly strong US dollar is all weighing on that Aussie dollar. So, Kim, why don't we go back to have a look at those global markets in Aussie dollar terms, because that's how our clients at Sharon Partners get their exposure to international markets. And it's a completely different story. This time, international markets look sensational. You can see, once again, the US, the biggest market, it's the standout performer. It's up 37% in Aussie dollar terms. But other markets, Europe, Japan, and even the emerging markets, all strong returns for the year and not bad returns for the quarter. So overall, when you look at how a diversified international portfolio went in Aussie dollar terms, up 30% for the year, that's going to give some great returns to our clients in their diversified portfolios.
So good for our returns, but maybe don't plan our next holiday for the US then, hey?
That might be a bit more expensive than what you think.
Well, Steve, thank you for joining us and giving us that insight as always. Of course, at Sharon Partners, we believe that the best idea is to maintain a well-disciplined, well-diversified strategy, which will take us through all market conditions. Thanks for joining us, Steve. We look forward to seeing you next time.
Yeah, terrific, Kim. Thank you.